G'day guys, welcome back to the Devon Too Good Investing channel. Today in this video we're going to look into Micron Stock and we're going to have a look and see how the business is run, how the industry that Micron is in has changed over time. We're going to look and try to identify competitive advantages in Micron's business, and then we're going to try to value the company and see where it's at today compared to what we think it's worth. So before we get into it guys, make sure you like this video, make sure you subscribe to my channel, and currently Micron stock today is trading at $85 Now we can see over the last 5 years it has been rather volatile. We've seen it's gotten up close to about $100 at one point and as low as $20 at one point. And straight off the bat, it looks like a cyclical stock. It goes through cycles, booms and busts. And we're going to get into that more as we get into this video, because I believe that the industry that Micron is in, it has gone through some structural changes, and I think it's going to start to move out of this cyclicality moving forward. So let's quickly touch on what Micron does. So Micron is an American producer of computer memory and computer data storage, including dynamic random access memory, flash memory, and USB flash drives. And Micron has two main revenue drivers, one being DRAM and one being NAND. So these are pretty much computer memory products. And then when we invest in businesses, we want to check to make sure it's got a wide moat, or in other words, a competitive advantage that protects its business from its competitors. And Micron has two big competitive advantages. The first one, and the biggest one in my opinion, is the barrier to entry. So Micron, they operate within what's called an oligopoly, and they're just one of three producers in the entire world and the only one in the West. So if you want DRAM or NAND from a Western company, Micron's your only choice, because the other two producers are located in South Korea. Not only that, is really hard for competitors to come into the space and compete. Micron's factories are extremely expensive to replicate, and this also kind of serves as a toll bridge moat, because literally, if you want DRAM or NAND, you've got no choice but to choose from one of these large players. And then additionally, Micron has an intellectual property advantage. So it's crazy. Micron has 40,000 patents, and this just further sort of increases that barrier to entry to be in this game, because they got such a technology advantage. And there's a story where China tried to not use any foreign DRAM products, and what happened was, and I've got a feeling it might still be happening, they're trying to have their own sort of DRAM players in their own country produce their computer memory, but because they lack the technology compared to some of these foreign companies, they just can't compete. And these companies are well behind in technology compared to, let's say, Micron, the Western counterparts. So this here really shows that Micron, it's got quite a strong moat. Well, I mean, it's in an oligopoly. There's three players, huge barrier of entry, and they've got intellectual property. Now, another crucial pillar of the investment thesis is understanding the supply side and the demand side for Micron's products. So if we look into the supply side first, in the past, as we've already discussed, Micron has been very cyclical, and it goes through big booms and busts. And this has mainly been because of a lack of supply side control. Now, we're starting to see better supply side control from DRAM producers, where DRAM producers over time have learned, hey, we're in this oligopoly. There's only three of us in the world, so why do we keep oversupplying the damn market and going through these horrible booms and busts? Why do we keep doing this? And it used to be a race to a bottom, but now, these businesses have realized that, hey, they don't need to do it. So now DRAM producers are not trying to oversupply the market, trying to compete each other. They realize, hey, there's 3 of us in this market and we don't have to race to the bottom. So what this means is, with this supply side control, this means that DRAM should have stable prices. Therefore, the free cash flow of the business should grow with demand, which is usually, pretty inelastic. But we can see there's a few tailwinds with, the demand side of the equation. So we've got 5G phones, and 5G phones require 6 times more DRAM than 4G phones. We've got self-driving vehicles, and these require DRAM. And, these self-driving vehicles, the DRAM must be on the vehicle itself. It can't be in some sort of cloud storage center. And then not only that is, we've got the use of GPUs in data centers. And GPUs need DRAM. Especially if you're collecting data, you need ways to store that data. You need all that memory to, complete the processes. So, look, the supply side, it's tightening. There's going to be more stable prices, and I'm predicting that these boom and bust cycles will not be as harsh, or might not occur at all compared to what they used to be. And this is kind of supported by the fact that Micron have introduced a small dividend, which I don't believe they would if they, thought, there was going to be a bust cycle coming around the corner. So why is Micron so attractive? So we've gone over its moat, and we've gone over the sort of shift in the supply and demand sort of equilibrium. But Micron is still trading like the same old cyclical it has been over the last few years in that boom and bust kind of industry. So I believe that Micron doesn't necessarily deserve to be trading at those kind of valuations. So I think Micron is a better quality company than the price is suggesting. Not only that, Micron's management are aggressively buying back shares with the free cash flow that they generate. So this is going to decrease share count. And while the share price, in my opinion, has been disrespected, they're going to be able to buy more shares with the money that the company produces. I also think that earnings will grow between 20 to 25% per year over the next 5 years, driven by catalysts such as 5G, self-driving vehicles, and more data centers. And their NAND products, they're growing at like 30% per year, and their DRAM is growing closer to 20. But yeah, I think this will average out to be around 20 to 25% per year. Overall, as well, they have a very shareholder friendly management team. So let's jump over to ticker and have a look at valuation. So I think one of the best ways to value Micron is by using the price to book ratio. So we can see historically over the last 10 years, Micron has been trading between sort of 0.6 to 3.5 book value. And the reason why I like to use book value to value companies such as Micron is when Micron's price to book is around 1, that's pretty much its replacement value. So if you were to sell all the assets and take away, pay back all the debt, you're going to be left with, the book value. And when this price to book value is around 1, that is your replacement cost. And when you're paying anything above 1, that's, pricing in cash flow from the business. So if you're buying Micron at anything above a 1, you're expecting this business to, produce cash flow, because why would you pay anything more than a 1 if it's not going to produce you any cash flow? So for me, Micron definitely doesn't sort of deserve to be trading, at 1.79 times book value. And the reason for this is Micron isn't that same old cyclical business it used to be before. In my opinion, the sector has changed. And I think a more fair sort of book value is probably closer to 3 for Micron. And, if the market gets frothy, it could even get closer to 4, in my opinion. So anything between sort of 1 and 2, I think is like, if you can get close to 1 where it gets to replacement value, I mean, that would be a great deal right there. Now, another metric we could use to value Micron is the enterprise value to EBITDA ratio. And over the last 10 years, it's been between 1.9 and 8.29 with a median of 4.36. Now, we got to remember, over the last 10 years, Micron has been very cyclical. Supply side control has been poor within the industry, but my thesis is that this will change over time, and it already is starting to change in my opinion. And Micron is being valued like it's a low quality company, but the reality is that it's going to be growing 20+% over the coming 5 years. And I don't think it's going to go through these boom and bust cycles where it gets to sure there's going to be volatility, but I don't think it's going to produce negative free cash flow anymore. I think even in the worst times, it will still be cash flow positive. So I don't believe that Micron deserves to be trading this cheap, and I think it wouldn't even be crazy if we saw this multiple expand to 10, or even if we're being a bit optimistic, 15. So that in itself, just through multiple expansion, could mean a double or a triple in the stock price. And that's not even factoring any growth. If we grow at 20% per year over the next 5 years, that's going to be about 2 doubles in the earnings. So let's actually bring up my calculator, and let's do a bit of a calculation. So guys, if we now do the calculation, so Micron's previous year's EBITDA was 13 billion. So what we're going to do is we're going to times that out, and we're going to apply a 20% growth rate, and we're going to assume that it grows at 20% for 5 years. So in 5 years, a 20% growth rate will land us at $32 billion in EBITDA. So let's say that Micron has a EBITDA price to EBITDA ratio of, say, let's just go the upper end of his historical sort of highest. Let's go 8.29. That lands us at a market cap of 268 billion. And if you remember back at the start of the video, the market cap was 96 billion. So that represents, more than a double, like a double and a half. And I feel like that's being pretty conservative, because I feel like, business like Micron, it could easily be trading at 10 times or 15 times. And I also think it's possible that they could grow faster than 20%. So, it just shows how much upside there is in this stock. I think there is, I would say, a margin of safety. I think worst case scenario, you'll probably make 15% a year on this, assuming that my thesis on the structural change of the computer storage, processing chips, with my thesis, as long as that, story, remains true, I think that, this prediction is fairly conservative. But anyway, guys, thanks for watching. Also, none of this information in this video should be taken as financial advice. But yeah, guys, make sure you like this video, make sure you subscribe, and have a good one.